We'll start with Siberian Tiger. Can you please cover a little bit beginners, traders' expectation? What a reasonable timeline for a trader to develop? Okay, let's go for and how to manage risk on that timeline, how someone's clips and lot size can evolve over time, or what's your approach with regards to new traders when it comes to handing them more flexibility around taking risks. Okay, so I'm going to speak about this a little bit from a floor perspective. We hope with also the Axia streaming channel that you get an understanding of when we are shifting our risk protocol, when there's a certain central bank event or a key technical structure that we'll be shifting our expectations on how much risk to take. What's a reasonable timeline for a trader to develop? So this is so dependent on the individual, and I know it's a kind of a cliched answer, but we've had traders, one of our fastest traders who's now in the Polish office, took him about 5 months to start drawing on his account. So the moment he went live, so he was on the sim for about 6 months, and then the moment he went live, there's a guy called Max, the moment he went live, he went down about £4,000 on account. And he went down here around 4K on account, and then after that he got it back to flat, and he started drawing. He started drawing money and started drawing a lot more as his career progressed within 4 or 5 months. My rule of thumb is you've almost got to see 18 months of the market. You've got to stay solvent for 18 months in the future as well, so you see all the seasonal volatility. You've got to go through the different volatility cycles, because different volatility cycles will require deploying different types of trading strategies. And so you've got to factor in account, for me, if you have really good methodology of recording your strategies, your debriefs, you give focused attention in the market day in, day out, you can really assess where you are 18 months within 18 months. And I purely believe if you have a great structure and methodology of what we try and train you guys on the program, if you follow it routinely, I can't see why you can't prove to be a trader that can take money out of this game. Okay, now one of our young guys is the youngest guy on the floor, Nick from Cape Town. He has just literally gone flat on account. He went down about around 15K on account, and he's now pulled it all back, and now he's printing up on account just over the past week, and he's really starting to have his most consistent run. And he started live December of 2016. So where are we now? So that's 7 or 8 months. I know a guy like Simon Calder, who now trades about 250 bunds, who makes exceptionally large days. It took him about 2 years to start drawing any money out of the market. Okay, but now he's led it for the young guys on how to Evernote your structures, and that's why we kind of train you guys. We always benchmark the best practices from the trading floor and then always implement it in the training program, and we'll get that I think in week 6 or 7 of the training program. But because he worked so hard on how to record all of his trial and error, the young guys such as Joe and Nick have picked it up now. They're starting from his finished work, which took him years, and now they're developing even quicker. Okay, so Brannigan also took a while. I would say he took over 2 years, and now he's just flying. He's doing exceptionally well. Demetrius was an exception. I think he didn't go down more than £1,000 on account, and he's just been up ever since. But those are exceptions to the norms. I've seen guys. Wakas, we've told you the story about Wakas. It took him about 7-8 years, but he just stuck at it. Just believed that he would be a trader, and now he's an exceptional trader. So with regard to timelines, what's very important is have an approach, a methodology of how you record your patterns. On Monday, if you watch that bund, if you watch the oil, how did it trade? How did it play? What was the context behind the play? How did you execute it? What was your thought patterns going into the trade? If you completely solidify that experience, you're one step closer to when the next time you're faced with that pattern, you're able to execute with greater conviction. So for me, it's a function. The reasonable time is a function of how effective your methodology of recording your patterns. The more confidence you get in your patterns, the more conviction. That's where size and all that comes into account afterwards. A lot of people talk about risk and how much risk they can devote on a specific day after a consistent run. My pure focus and the focus I have with all the young guys on the team, just our belief system, is what's important is document your setups and your strategies. The moment you've documented your strategy and your setups and you face with it again, or you've watched the replay videos, you want to execute more confidently the next time. The more confidence you get in your pattern, the easier it is to put size on. When all of a sudden the pattern's pulling at your gut, it actually becomes easier and easier to put size on with fairly limited risk exposure. So that's. So again, I'll just reiterate: a timeline is a function of your ability to record and debrief and have an impeccable routine to where you will get on your development life cycle. But if I had to give you an arbitrary, or if I had to give you a number, I would say give yourself 18 months to 24 months. See all the cycles, and you have to have behind those 18, 24 months and phenomenal routine. It's such a professional game. If you've had 6 months and then also you made money and then 2 months you start losing money, you get despondent, your routine slips, you think this market's crap, you're never going to make it. You've got to be gung-ho, as enthusiastic as you guys are on the training floor in your first week of the career program, how much you love to, you've got to be like that for the rest of your career if you want to, every single guy out there who's making money day in, day out has that passion when they come into the market every day. Okay, and how do you manage risk? Now, this is really important. And how do you manage risk on that timeline? So if we're looking at around 18 months, now I can only speak a little bit from the perspective of within the proprietary space, okay? But then I also do know there's a person who's trying to develop at home, okay? And I'll devote a little bit more thought to this and come back to you, Siberian Tiger, on this aspect, because I haven't, I will devote more thought, because I don't want to give you an answer that I'm just coming up on the spot at the moment. But the timeline of how we do it, so maybe you can associate it within the home environment. Within a prop firm, most of our young traders go down on account of the meeting. They, I almost say, a guy who's on the simulator, whatever performance, I've had so many guys come to me, contact me from outside. Okay, this is my sim performance. I make, 200 euros a day. Can you put me live and so forth? And I look at it and I say, you've literally defied your performance on the sim by about 5. I don't know. Generally, whenever I put a guy live, if he's been making 800 euros a day, it's hard. He finds it tough to make 150. Just because that mental, psychological it shouldn't be like that. If we were the complete, Buddhist trader, we'd be able to just transcend from the sim into the live environment without having to think that there should be a psychological adjustment. There shouldn't be if you're just being purely objective on your play and on your setup. But generally, a guy, he might be up in his first week, but then all of a sudden he has a couple of trades that goes wrong, and then he gets in a little cycle, and then he's questioning himself, and then it becomes a battle. And then he's down here. So this is your 0 line. So what I've noticed is, then there's a confidence, the psychological aspect, but then they get into a zone where, okay, I just need to develop my game, my routine, my setups, and then they start flatlining. Now, it's our task here at the, with the more senior guys, as we train the younger guys, is when we start seeing the improvement, even if the guy is down on account, we start seeing a guy's improvement, and he's starting to show consistency in his approach and the setups, and he has confidence in his plays. We might start increasing his size when maybe he's at the lowest point of his P&L cycle, provided is increasing his size into a play that is a conviction play for him. So you might be having a down run, and we've had, and I've increased size of a trade, but for the first time he's showing a little bit a patch of consistency in an approach, and he's building an inventory of patterns that he has conviction in. Then all of a sudden this can start going towards here, and then it can almost become rather exponential. So for us, we we at a firm, we judge it depending on the person. If he's showing a good routine and he's showing that he's putting on the setups, but he's just getting, the timing wrong, and he's just being, he's just losing money through his desk fees every month, he might be down 15K over 6 months, and that's fine. But if he's down, 5K in the first month, and he's just got no regard to routine or developing a process, we might get rid of him. Okay, so it's about keeping it it's about keeping it and making sure that the market is not costing you money whilst you're developing your patterns and your setups. Okay. And once you develop those patterns and the setups, then you want to expose your risk capital to those plays. All right, because a lot of times, and that's why after you train, the sim period of developing is important. But then after those 3 to 6 months, then you actually want to now test yourself psychologically in the market, and how powerful you're in the market. But I don't expect, I've seen, 18 to 24 months, you might not draw anything. You might not be profitable. On our trading floor, I'm trying to push that down to around, on average, down to 8 months. Because if you have the collective group of experienced guys, you're in that environment, whereas you're at home, you might not have that collective experience. But that's why we kind of created the Axia channel to kind of maybe, if we can, resonate some of that information through our walls over here. But what's so important is how do you compress this? And this is a function. How do you compress that into that? And that's a function of your method. And I'll keep on reiterating your routine and your methodology of your recording patterns. In your last 3 weeks, I think we keep on going on it. How you record your play. What are the top plays of the day? We'll look at the top plays of the day that the guys executed on here, reconcile with you guys. How do you then record that? And how do you develop your own inventory and style of execution patterns? And clips and lot size can evolve over time. So your clips and your lot size evolve as you gain more. What I don't agree with is, okay, I've had 5 up days, I'm increasing my size next week. But you're increasing your size next week in the quietest of market. There's no plays, there's no setups, there's nothing to do. But no, I'm just increasing my size because I have a good week. Increase your size on the plays that are making you money. So the next time you see that play, you should have greater conviction if the same contextual background is there. So every time you have a 1 week hourly base formation of the bund that has a negative 100K delta, and when it pierces a certain area with a certain type of volume velocity on the price ladder, I'm going to increase more size. The French auctions, I've spotted a pattern on every French auction of above 9 billion. Whenever there's a French auction of above 9 billion euro in issuance, at about 10 to 10 to 10 past 10, there's always a bid, but that bid comes in at around 9.52. He does this type of price action. If I see that again, the next time I'm going to execute more size. So this, the clips and lot size, you should always, when you've discovered a pattern that works, there's a couple of guys who do something really amazing on cable once a month. And for the last 8 months, they've been spending more and putting more size on it, and they're exploiting this pattern. And they're putting more size on it simply because they gain greater conviction in the pattern, not because I've had a good run, a couple of days, and I'm just going to go in with the high clip, but it's not within your setup. So this should be, your clip and your lot size should not really be a function of where you're, in an ideal world, and I know we have these constraints, but should be a function of the conviction levels you have with your setup. Okay, you should always be pushing the boundaries with your setups and your plays.